Welcome to the Real Estate Investing School podcast with our guest today, Kevin Massie, or KC Massie. He was born and raised in Lexington, Kentucky. You played baseball for Georgetown in college, is that right?
That's right, yep.
Awesome. You graduated with a degree in finance and Spanish. What's fun about you and your wife is you guys do real estate together, you invest together, and you're both named Casey. So
It can get confusing, yeah. Our tenants, they never know if they're talking to boy or girl Casey, so it can get confusing.
Right?
Yeah, it's fun. So
I think you guys are on Instagram as the Cashflow Caseys, so it's catchy. I like it.
Yeah.
You guys been married, 8 years now? You have 2 children and a third one on the way coming in August. Is that right?
Yeah, things are changing quick, yeah.
That's exciting, man. You're going to be outnumbered.
It's scary, yeah, so I don't know. 2 is easy, but third is nuts.
I don't know about easy. I've got 2, and I still feel like I'm drowning. I could imagine a third, but
yeah.
Well, that's sweet. Well, you guys, your real estate journey's been pretty awesome. You guys started, just like 10 years ago, I guess? You bought your first in 2012.
Yes.
You're now over 120 units, which is, I think a lot of people just like that. I mean, units can be, mean a lot or mean a little, but that's still super impressive no matter what. And the cool thing is 86 of those, you traded up 3 different properties to get those 86. Is that right?
I think that's what people don't kind of understand. They think you just have to have a lot of money every single time, but it's not always the case. You can do it with just a few good purchases. You can build into a lot bigger things. So
yeah, I definitely want to dig into that and how you made that happen. But that's super cool. So you guys obviously have, over a decade of experience, not just in buying, but in trading up and doing bigger stuff. And then you also property manage everything yourselves. And even it looks like you guys do another 20 or 30 properties for friends and family as well, managing their stuff. So I want to dig into some of the property management stuff because that's obviously a big thing you guys do, how you got to so many units in just a decade, which is really, really cool. But yeah, I don't know, maybe you can tell us a little bit about you, anything I missed that I should mention, and we can kind of dig into your real estate story.
Yeah, I mean, you're only as good as the team that you surround yourself with, so it makes it much easier to do the things that we've been able to do, having a good team. That includes, your spouse if you work with them, or, contractors, handymen, or if you're using a property management company, having a good team takes a lot of the stress out of it. I listened to a podcast recently and the person owned $750 million in portfolio, but they did everything on their own, and they used to manage everything on their own too. They ran a company, and they said they started to hate real estate. And so if you ever start to hate real estate, it's either you're not doing what you built the system to, what it's intended to be there for. It's intended to be there to give you financial freedom, which is what you and I talk a lot about. And so if you're ever hating it, it means you're doing something you probably shouldn't be doing in the process.
I really like that. I like that perspective a lot with it. And it's kind of like at the beginning, you might wear all the hats. You're managing yourself, you're buying yourself. Some people are rehabbing it themselves, whatever. But that should just be a stepping stone, and a learning curve but in the long run, it shouldn't be that way. And it doesn't even have to be that way at the beginning, but it's not a bad place to start. But like I say, if you're hating it, you're doing stuff you shouldn't be doing. I like that.
Yeah.
So you guys, I don't know, let's just start, I guess, with your first property. I think it's cool that you guys do so much together. I guess you bought your first property before you were married, back in 2012. Tell us about that and how you found it and if, what ended up happening with it.
So, I was doing door-to-door sales. That's something you and I worked in the same industry, and it was a huge opportunity. We was able to make money and get it paid in a certain way where there was a big check at one time. So I'd always, I read Rich Dad Poor Dad shortly after my mission, and I just knew I always wanted to invest in real estate. It just wanted to be the right time. So I'd hit a goal and I'd made an amount of money that I wanted to make, and when I made that, it was time to start hunting. And so we found this was back when bank-owned properties were more of a thing, and we found a condo in Provo. it was close to my wife or my girlfriend, but it was close to her parents' house, and it was kind of a way to, I always felt when I met her that I was going to marry her, and so when I found that house that was close by, I was like, this is kind of like a little hint that I'm serious, and so we bought that, and I house hacked that, so I rented 2 rooms out to friends, and so I was able to live kind of for free because I was still single, and lived there for about a year, and it worked out perfect. So
Nice. That's a power move when you're dating someone and just go buy a house closer to them.
yeah,
It's like, hey, I'm close, baby. I
yeah.
like that. That's sweet. So you bought this condo. You got it on from a bank auction. So it's just the bank list, bank owned properties,
No,
and
it
you
was
just picked
it
it
was
up,
listed.
or was it like an auction?
Yeah, it was listed on the MLS. So it was back then, you could find listings, and the seller would be a bank. The seller would just be a bank institution that was just offloading some property. And it's not like it was a crazy good deal, but there was just not as many people competing for it. And they have a bottom dollar that they'll have to take. So they'll just let it sit. They're not stressing. So I think it was listed for like 205, and I think I got it for like 197. So, but there was like 3 or 4 in this building for sale, in this condo building, and so kind of got the pickings. I could pick whichever one I wanted, so I went through a few and found the one I liked the best, and it was kind of easy. There was no one else bidding. It was a different market then. You weren't bidding with other people. You weren't. It was. I'm not gonna say easier back then because money was, I guess, more scarce because there was less equity in all these properties. So like money was not as heavily printed as it is today. So now there's a lot more cash flowing in the markets, and that's why you get so much more competition because people are just throwing around money that's not worth as much as it used to be. So
Yeah. So you house hacked it at first, rented out some rooms, helped cover your mortgage, some or all of it. How long did you end up holding on to it, or do you still own it?
no, so I held that till 2019. So I held that for 5 years, no, 7 years. Bought it in
Years.
2012, into 2012, sold it in 2019.
Nice. And did you sell it just to because there was a bunch of equity and you wanted to pull out some money, or did you sell it to buy another property?
So, you will hear cap rates. People discuss cap rates and, what's you buy at a certain cap rate, but then there's a certain point where the investment doesn't make as much sense as a rental property because the cap rate will change drastically with the amount of equity that's in the property or the value of the home, let's say. So if the home's gone up a lot, but you can't rent it for as much, if the rents have not increased the equivalent of the value of the home, you can take that equity and do more with it somewhere else. And my wife and I, since we wanted to be financially free and not have a normal job, our goal is to never have like a normal job. So when I realized how much equity had grown in that, we sold it and we were able to just reinvest. We had about 160,000 in equity, and we took that and turned 1 unit into 14 units. So you go from cash flowing. We were cash flowing about $600 a month on it. The HOA fee had kept going up. We couldn't short-term rental it. You can do a short-term rental, and we could have increased the rents drastically with that, but we weren't able to do it because of the HOA. So we said, let's sell this one, and we bought 14 more units. So from that one move, we went from 600 to 6,000 in cash flow without taking any new money. So
Now, was that in the same market, or did you market swap at all?
we moved markets. So we had moved to Kentucky, and so we were sold that because we weren't there anymore in Utah, and we decided to buy a 10-plex and 2 duplexes. Well, yeah, a 10-plex and 2 duplexes. So yeah.
Super cool. Like, I want to pick that apart a little bit. So basically what you're saying is the rent to purchase ratio, the value of the home, and then how much you could rent it for just got so far apart after 10 years because the value went up, but the rents weren't going up as high as the value. So then, the hard thing is normally if you sell that, if you just turn around and you're in the exact same market to go buy something else, you're kind of in the same boat though, right? You're in the same situation. But what you did that was so key is you took that money from a high appreciating Utah market and then took it to a Kentucky market where things weren't as expensive, and you're able to buy a lot more units with, you 10x your cash flow by just really, being patient, getting that equity, and then market swapping.
Yeah, so we've done that.
But that's crazy. 6,000, you said you got it to 6,000 a month cash flow?
Yeah. So we purchased a 10-plex for, I think it was around 450. So we got 10 units for 450,000, and the rents needed to go up on it. So there were some improvements we had to do, but it wasn't astronomical. We actually got a new roof out of it from insurance, so that was nice. The seller was thinking it needed a new roof, which it did, but shortly after buying it, insurance covered a new roof because there was some storm damage, so that was nice. So that saved us 15 or 18,000 that we had used to negotiate down the price. So it kind of, we made money from that. That was cool. But yeah, the amount of cash flow from that and the two, we actually had an owner that we had done some owner finance deals with. And so he had two that he was ready to sell that we were kind of just waiting on. And so we bought those two as well. And we didn't have to do the traditional 20% on those. I think we did around 8 or 10% on those two down because that's all he wanted. So we did that. So we were able to just take that 160 and put it, I think it was about 100K on the, because 25% of 450 is about 100K we put down on the 10-plex. I think it was like 95, and then we used the remaining for the two downtown campus rentals. But yeah, the rents are significantly more based off the price of the asset here in Kentucky. Not that the rents are higher than Utah, but the price comparative to the rent, what you can rent it for, is a little bit stronger. So.
Yeah, dude, it's just so crazy because, I mean, you don't need to be this huge real estate guru and own thousands and thousands of properties to have it be life-changing. I mean, literally from one property in less than a decade, you're able to, have a comfortable living that you can just live off that. I mean, obviously, everybody has different levels of what they want to come in, but it just goes to show just like one or two properties can change your entire life, which is really, really cool. And then if you want to keep going with it as you learn it, can obviously you guys have done even more than that. But that's not a bad start from a cheap little condo they picked up from a bank.
Right.
Sale,
Yeah. It was very, yeah.
That's
And
awesome.
we never, we didn't know what the plan would be. People have these exit strategies that they set up for the future, but sometimes it's not an exit strategy that you need to buy around. You just need to let the time appreciate the asset. Because when we buy things, we never intend to sell unless there's something, life changing or some sort of, it has to make a big change because you always regret. You and I have discussed we always regret the things we've sold. You never regret the
Yeah.
things you buy and hold. So when we had the opportunity to 10X it, it was like, what are we thinking? Like, this is a no-brainer. So that's when we sold that. So
For sure. And I used to have a rule of like never sell your property, right? But then I adjusted that rule. And so one of my main rules of real estate is you never sell assets for money. You sell assets for better assets. And that can mean a better area, that can be better cash flow, that can be more. It can be, all the above. But if you trade an asset for a better asset situation, then yeah, you'll never regret that. But if you sell it because, and a lot of people right now have a ton of equity in, maybe their private home or that one investment they do own, and it can be tempting. I've had lots of friends reach out like, dude, should I sell my condo or my first house? They have one or two, and there's all this equity. I'm like, well, what are you going to do with it? If you just sell it because, there's 100,000 in equity, and then that money's gone, because you bought, you paid off some debt or you went on some trips or whatever. Money gets spent if it's sitting there, and it's useless. And so it's like you want to take that money and roll it into a better asset that'll pay even greater dividends. And that's exactly what you guys did. So you did it right, which is super cool.
yeah. No, so there was I don't remember the exact quote. A buddy of mine told me he was chit-chatting with the guy that started Wingstop, and so they were talking, and he picked his brain a little bit in the short 5 minutes they were waiting for an Uber ride, and he said, I won't get it perfect, I'll butcher it, but he basically said he sold Wingstop for 30 million when he actually switched to be vegetarian, and he made an emotional decision, sold it for 30 million, and if he would have kept it, it's now worth 2 billion. And he's no longer vegetarian. He's only vegetarian for like 6 months. But he basically said, don't sell your, don't sell your, it's like, don't sell your asset for a pot of gold. Don't sell your, cash cow for a pot of gold. You want something that's going to keep producing, not just that pot of gold. So.
Yeah, 100%. I didn't know that story. That's crazy. and hopefully did something good with that 30 million. I feel like he's
Yeah,
probably
they
super
could. Yeah,
okay.
it could have been still good, but yeah, it's kind of funny how things. You never know how they're going to play out. But yeah, so like you said, you just want to buy something better. And so every time we've sold, the three that we've sold was always to roll into more. The first time we sold a house, we bought a duplex and a single family, and then we sold this condo. And then the third time, I'm sure we'll go into it, but we sold our single family home that we lived in, our primary residence in Utah. We sold that, and we bought 65 units from that one
Yeah,
sale.
let's dig into that. Like, so how, first of all, I mean, I guess we could go back. Well, let's just go straight to this one because I want to like how you're finding these properties, finding 10 units and 65 units. What made you feel comfortable pulling the trigger on them? But tell us that story about how you're able to trade your single family home in Utah for a 63, 68, what is it?
65, yeah.
A 65 unit in Kentucky, which is where you live now, which is your hometown. So it was like perfect because it wasn't some random out of state investing. It was actually it was in state, is where you're from, is where you're living, and you could self manage it. But how did that whole deal work out, and how did you find that? Because that's pretty crazy to think about.
Most of what we found is either on Zillow or LoopNet. We do have some realtor friends that are like looking for deals for us that are off market. We've never bought any wholesale deals. We've bought one auction property that was just at a private auction. An auctioneer was selling one, but nothing crazy. On market stuff like it's not that way right now, until this past 12 months, 18 months, like it was much easier to buy a decent, multifamily unit. But this one apartment came up for sale in 2021, and we never wanted to sell our Utah house. My wife and I had kind of remodeled it in the way that we wanted it to be like our dream home, but when we were living in Utah, we were those investors investing from out of state. We were in Utah managing and buying from Utah in Kentucky. And it was just because of cash flow. We could cash flow a little bit better, and it became kind of hard because my wife does 90% of the work. So she was like, it would be much easier if we were there. And so I said, hey, if we move there, we're going to go all in. This is what we're going to, we're not going to hold back. I think we had like 20 units or something at the time when we were living in Utah 2 years ago. And we literally did that. We were kind of just waiting, right? You weren't trying to force anything. I never thought I would buy something that big, but when it got listed, I said, well, I'm just going to go look at it. Like I'm going to see what it's like. And I'm doing this property tour. I just called the listing agent directly and I said, hey, like, it's okay if I tag along your next showing. Like, I don't know if I'm interested, but like, he was a broker. So he was the owner, the broker, and the agent on. He was all three. And so he knew the property.
And you found it just off Zillow or what?
This was on LoopNet. So it was on LoopNet. It was listed for 4.5 million or something. And I was like, I more just wanted the experience, right? I was like, hey, I got nothing to do. I'm going to go look at it and I'll learn a little bit how to analyze a property of that size. Because everything we'd done before that was 10 or less units. And I was like, I'm pretty comfortable with that. Let's just go learn it. Let's go figure it out. And I go through this showing with a couple other people and they're like, doctors or like syndicators where they're with a bunch of other, they're looking for a bunch of investors and I'm just like this guy with like my janitor key belt, and my shorts and t-shirt and, they're like, who are you? Are you like a handyman? I'm like, no, I'm just looking, I'm just taking a look. And so, a couple of us put in offers, but the guy liked me the most because I was using him as the agent. I didn't use anybody else. I just went through him and I told him our story. That's a big part of investing. If you can get directly in front of the owner or in front of somebody that, not necessarily, they look up to you basically because you're back where they were maybe 10, 15, 20 years ago. And so I'm talking to this guy, he's probably in his 60s, 50s, 60s. And I was telling him like, hey, like this is what we're doing. We do everything ourselves. And he kind of, I think, had some respect for us and he liked our offer, even though our offer wasn't the best. He then gave us a 3% kickback towards closing for improvements. There's some units that weren't fully finished. So there's 4 units that weren't done and he gave us about 3%, it was about $125K back at closing to use for improvements. But when I first analyzed the deal, it wasn't a good deal because it was 20% down on a $4 million property. I mean, that's 900 grand. You know, you're talking, it's like, I'm not going to come up with that. I was going to include some friends or family if it was a home run, but I was like, it's maybe a double. You know, it's nothing crazy. But long story short, we looked at it, and then he gave me the number of the lender he had. So this is where that kind of, you know, people always talk about making connections and making, you know, just putting it in the universe, you know, just talking about real estate, you know, learning. The more you're exposing yourself to it, the more you're going to have you know, the luckier you're going to get. The harder you work, the luckier you're going to get. That's probably my favorite quote. You know, you're going to ask a question at the end. That's probably something I would text to the world. But yeah, there's a couple things that I would probably say. But that's one of the most important things. The harder you work, the luckier you get. And so this guy gave me the contact of a lender. And he then took a 10% down payment instead of the traditional 20 because they didn't want to lose that loan. They were the current loan holder on the property, and they didn't want to get paid off and have to go reinvest that millions of dollars somewhere else. You know, it doesn't do them any good to be a bank and hold a bunch of money. So long story short, they took 10% down. We got a kickback at closing. So it ended up turning out to be a really good deal. So
I think that's really powerful when you can align everybody's interests. You know, you figure out what your needs are, what the seller's needs are, and again, including the lender's needs as well. Like, and that's where you created a home run out of, you know, maybe just a mediocre or okay deal, because you're able to include everybody's preferences and needs and put those together. Well, and then one thing you hit on, I think, and correct me if I'm wrong, the reason you're able to get that 3% repair credit is because he was the closing and selling agent on it, because you went to him directly,
right.
Which always, like, it always just sweetens the pot if you don't have an agent that finds you the deal, yeah, go to the agent that's listing the deal. Like, I think that's such a great trick because they're now making double, which means they can afford to take a haircut, or they're just more incentivized to have you be the buyer or whatever it may be. And there can be some conflict of interest, and you want to make sure you're kind of doubling your due diligence and making sure it's a good deal, because now you don't really have a lawyer in your corner making sure that you're okay. But, you know, I think that, anyway, that's a really cool trick, you know, so you got him stoked, you got the lender stoked, you made sure it met your criterias, and then it worked in. So let's dive into that lender situation a little bit. So the lender had the loan currently on the property. They didn't want to have to repurpose all that money and have it paid off, because that's not how lenders make money. They make money off the interest. So you got them to create a new loan under your name, or you took over the existing loan?
So they just created a new loan. So basically, you know, the property I purchased at a higher price than what they purchased it at 5 years ago. So it was definitely worth more. So the loan was different, but they didn't have to so basically they lent out more money instead of, you know, getting anything back. So they were happy, and we had some equity in some other property. And so normally the best they would do is 15%, but we were able to get them down to 10% because they held a second. So this is another trick that I didn't really know was possible. So we learn these things as you go, and if the deal falls through, big deal, the deal falls through. But you go through these steps, and kind of like you said, like, you learn them, you know, in the whole experience. And so I was learning about this bigger deal, but once you do, it's all the same, right? Like, buying a duplex is the same process of buying a 10plex. It's not any different. It's just you want to have maybe different reserves. You want to have some different, you know, management policies because it's more units, but it's basically the same thing. So once I got past that and figured out, like, hey, it's the same thing, and I can get it at 10% down instead of all these other properties. I do 20 to 25%. My cash on cash return was way better. I had some equity in my primary home here, and they said, hey, we'll just hold second note on your home. That'll make up the difference for the 5% that you're not giving us. So I don't have to pay. I'm still paying 90%. My loan is for 90% of the purchase price, but they hold second mortgage or second note holder on my primary residence. If something was to happen, or I lose something, you know, couldn't pay the mortgage, they can take some of the equity that's in my primary home, which obviously is a scary thing when you think about it. It's like, oh my gosh, am I going to lose the home that I live in? But this thing cash flows so well, it's like, I mean, everybody would have to move out for us to, like, you know, B, struggle paying that mortgage. But
Yeah.
even then, we have enough cash flow from the other properties. We didn't just dive straight into a 65 unit. We had 50 something units already at the time, so it was something we were able to comfortable risking.
So when they put a second mortgage on your primary residence, was that just like kind of a collateral lien
Just a
on it,
collateral.
or did they actually do any cash out refinance or pull any money? It's just they're like,
Just
hey, we'll let you put less down on this loan if we can just secure some collateral on this other asset.
that's exactly. So that's the way.
Was it their idea or your idea? Because I've never heard of that.
Yeah, so it was actually their idea. They said, I just told them like, hey, because it was cool because I picked apart the mortgage. So this guy was a broker. The guy that sold it owned his own brokerage, and so he knew real estate really well. And so he was really
Yeah.
kind of taking me under his wing, even though he was making money as selling this property. I was just picking his brain. I was comfortable because he was someone that was experienced enough that he could answer some of my questions, and I felt confident enough that he wasn't going to be giving me a bad property. And I did some homework and research on this guy, and everyone, checked out everywhere, and so everyone's like, yeah, he's a really good dude. Like he'll help you. So
That's
he
cool.
said, I think you can get away with doing 10% down. They did that for me originally. He said something like that, and I was like, okay. So I
Mm.
started pushing straight for that. I didn't go for what's the best you can do. I went straight for the 10%. And they said, yes, we can do that if we appraise your house and it has enough equity. And luckily, the market had gone up, so we had enough equity in our own home where they were comfortable saying this we will hold as collateral. I can't sell this house until I make sure I have more than 85% loan to value in the new property. So, which I already have because we've raised rent so much, we've done some capital improvements, so it'll already appraise for that 85% that I need to be at. So if I did want to sell this house, I would just have to appraise. It's kind of like if you have PMI on a loan. Like if you go into a
Yeah.
property and buy 5%, 5% down or 3.5%, you're gonna have PMI until you get to 20% equity in that property. When you get that 20% mark, you can go to the bank and refinance it, and they will remove that PMI. And it's an easier process because they usually just order an appraisal and they say, okay, well, look, your property's worth more than this amount. We're going to remove the PMI. So basically what they would do, they would release the note, release the second mortgage holder on our house, even though I don't pay them anything for it. They would release that once I own more than 85%, which I just haven't felt a rush to appraise it again because it's expensive to appraise a 65 unit building. So,
Yeah, I can imagine. That's super cool. And this bank that you're talking about, the lender, they're not a big multinational lender. This is like a local lender. Is that correct?
it's just a local lender that I didn't even know about until going through this showing, and he said, well, reach out to this guy. He might be able to do something better for you than what your current bank is doing. And I always like to work with local banks just because they give you more options. They can do an in-house loan, which is better terms, or maybe not in better terms, but that easier process versus going the 30-year conventional, which I do like the 30-year conventional when you're purchasing in your own primary name because your rate's locked, everything's good. Local
Sure.
banks are usually going to do a 5 to 10-year ARM, but it's just quicker. Like they can turn around in 2 to 3 weeks versus, these, when you're doing a 30-year conventional loan, it's like, it can be 45 days, it can be longer. So
That's super cool. Yeah, I think that's something really powerful people don't always realize is the flexibility of like a local lender doing a commercial loan where they don't have to follow the Fannie Mae, Freddie Mac guidelines. They can really do whatever they feel comfortable doing. And if you give them security with this collateral, you do this, you do that, and they feel solid with it, then they can do it. Which people think there's all these set rules to getting a loan because they bought their initial home maybe, and they did a traditional, even an FHA, very strict guideline loan, and then they feel like, at least I did, I thought that's how loans work, and then come to find out it's like the Wild West out there. Really, they can do whatever they want almost, as long as the underwriters feel comfortable with it from that lender. And so it sounds like you definitely took advantage of that and had some insider information from the guy you bought it from.
mhm.
And like I say, I love it when you can talk to the person, the actual owner. When people talk about doing due diligence or vetting out properties, my number one thing is if I can talk to the owner, or even better, the tenant. If you can talk to the actual people who have been living there and owning it, you'll learn way more than talking to the salesman, the agent, or
100%.
whoever's just trying to displace or move the property to make a commission, which is, you know, just super powerful, So
Yeah.
that's cool. And even then, I like how you said you vetted out the guy, because he still had an agenda. He's still trying to sell something, and he's going to make a lot of money on it. So it's like, how do you know you could trust him? But you did some research on him, which I think is key as well.
Yeah, no, I think you're right. Like going back to like when you're looking at properties, like when we were doing our tour, I would go back different times without the real estate agent there, and I would just ask people like, hey, like, because some of them knew it was for sale, and I was just like, is it a good property? Have you enjoyed it? Like, how's management? Like, what's it like at nighttime? And go by at nighttime. Go by at 10 o'clock at night and see if it's, a shady area, or there's a lot of, congregation going on. Like, you want to, and that applies to a single family, a duplex,
Yeah.
fourplex, just going in and I'll, I'm doing the showing or walkthrough. I hope a tenant's there. I want to catch someone there so I can say like, hey, how's it been living here? How do you like it? Like, what needs attention? And because they're going to say, oh, well, every time it rains, my floor floods, which you and I have dealt with a little bit on one of your properties. But yeah, it's
Yeah.
those things, those questions go a long way, and sometimes you don't get the answers, and you find out later. And I've bought properties. I bought a fourplex, an old lady. I don't know if anyone's seen Dumb and Dumber when you get robbed by the little old lady in the motorized cart. I felt like this little old lady kind of sold us a bad deal. My first fourplex, actually. One of the units was vacant, and we were trying to fill it, and we actually hired a property management company to fill that one unit, and they did. And every time they showed it, they're like, "Who's been in here? The sink's real dirty. There's black stuff in the sink." And we're like, "I don't know. We're in Utah. Like, what? I mean, we don't know what's going on. You figure it out." Anyway, long story short, the sewer line was completely eroded underneath the slab, so inside the concrete, it had just kind of collapsed, and we didn't know that.
Oh,
It was
wow.
not found. You don't typically snake or camera lines on an inspection, so
Mm-mm.
every time people would use their water, it would back up in this fourth unit, and so that's why it wasn't rented. This old lady didn't need it rented; she owned it outright, so she was just living off the
Wow.
free. Husband died, so she sold it. She might not even know. I don't know. I didn't talk to the owner, but found out, $13,000 later. Luckily, insurance helped with a good chunk, but we had to jackhammer the whole floor, redo the whole sewer line, and I didn't know that. There was no sort of due diligence that would have found that because there was no one to ask, and you just got to be
I'm surprised
prepared.
your insurance covered that. Typically, they're just covering like sudden event damage, not long term kind of breakdown.
And I can't
Was
tell
there a
you
trick to
why.
getting your insurance to cover it, or that you just lucked out?
I can't tell you why. Typically if a pipe collapses, you're right. It's a old age. It's corroded. It's just part of natural
Yeah, just
progression.
natural wear and
Yeah,
tear.
natural wear and tear. So when we called our insurance, they came out and they determined it was a pipe break. At least the what do you call it? The inspector did. They called it a pipe break versus
Great.
a pipe. Just all on how they classified it. And so, I mean, we still paid a couple thousand out of pocket for some other things that they didn't end up covering, but most of it was covered. So we were lucky on that one. That might have been one of those experiences that would have turned us off to real estate. But luckily, we got caught. Some things you just got to get lucky on, but most of it's just giving yourself a chance and just you know figuring it out, finding a way to make it work. Because it wouldn't have broke the bank if that happened, because it needed it, right? A new sewer line is a big value add to a property, because if it's a 50-year-old property, it's going to need it. Every property that's 50, 60 years old, you're going to end up having to do it if you haven't done it yet. So just something to budget for.
Yeah, no, and I think you hit the nail on the head where it's like you just find a way to make it work. You know what I mean? Like maybe that one was vacant for longer than you wanted. Maybe you run into these issues, but like in the long run, it's gonna be worth it. It's just not as cookie cutter and pretty as people want it to be.
Yeah.
When they first get into it. I found that a lot. I teach a lot of different students and new people of like how to get into real estate investing, and they're always like, oh, is this gonna be like a cool property? Is it dope? Like, does it look nice? And I'm like, it's not as sexy and flashy and cool as that typically when you're first getting in to real estate investing. It's buying things that need work and need headache and need a little bit of sweat equity, and that's why there's a deal there. You know what I mean?
Yeah.
But
Especially multifamily, like, yeah, people just need a place to live. And people are talking, is the market going to correct? Is it going to be a crash? And you and I were talking about this prior to jumping on here, but multifamily, if anything, buying homes is getting more and more expensive. So more and more people are going to have to rent. They're not going to have the option of buying a home. So these multifamily 2-bedroom, 3-bedroom apartments, the rent prices are going to just be driven up because they're not building enough. We're building at a historic low. We are way underdeveloped for the past decade, or underbuilding for the past decade. So these apartments,
Yeah.
and duplexes and fourplexes, they're just going to be, rent is just going to keep going up on those just because of demand. You shouldn't go
Yeah, for
buy
sure.
a
And then
million
in the more
dollar
remote,
house right
oh,
now.
go on.
I was just saying
What
you
was that?
shouldn't go buy $1 million 6-bedroom home for yourself right now, but you should still be looking for that $1 million, 20 unit or the $500,000 eightplex. Those things are still going to have high demand.
And what's really cool about multi-units, whether it's a duplex, fourplex, or even you get in that commercial space, 5 or more, what's really cool about them is if there is an issue with one, it still should be able to cover most, if not all, of its cost. You might not be cash flowing, but it's still covering its cost on the units that are still rented out. Like you said, you had that fourplex, and one of the units was bad. You were still cash flowing on the other 3 units to pay your mortgage, to pay your insurance, to cover your expenses. And so you're not as much out of pocket, which is nice, especially for someone who's just getting into it and they don't have a huge cash reserve of working capital to kind of cover the mortgage as long as they might want. But then with a multi-unit, it kind of is a little safer there. Like you were mentioning, even with your 65 unit, you'd have to have half the things gone before you'd really have to be worried.
Right.
Half of them have to be empty, which just gives you a lot more breathing room. And you talk about the market right now, and it's crazy, and there's so many question marks. Is it going to collapse? Is there going to be a recession? And obviously the real solid answer is nobody knows. And yes, something's going to happen, but we just don't know what it'll look like. But the bottom line is the best thing you can do is just have good safety margins. You know what I mean? Have some leeway there, and multi-units give you that. More than just a single family, especially an expensive single family, that if they're gone, now you're forking out a $5,000 mortgage because of one tenant changed their mind,
Yeah, like I think it's a good time. You see everybody saying prepare for the worst. Recession. Recession just means our economy has shrank in 2 successive quarters. 2 quarters in a row. So it's not that big of a deal, especially where we were printing this crazy amount of production, and it was just crazy for a while. So recession might happen. It's more of a scary word than an actual scary thing, but it is a good time to get your house in order. You shouldn't be, just because you can afford a $1 million house doesn't mean you should, or even a $500,000 house. So do cut your own expenses, but invest in those those cash flowing assets, because that's where people are going to run to, the safe places, and that's multifamily is one of those safe places.
Yeah. Well, and cash flow is the safest way to invest in real estate. I mean, if you're doing big value add stuff or development stuff, and you're having to refinance down the road and hope, hope the value goes up to sell it, and a lot can shift in that time. We're seeing things shift really quickly. I mean, whole basis points jumps, on your interest rate overnight. Like, a lot of crazy things are happening. But if you just buy and hold, the market can go all over the place. And then what I've added to my deal calculator, and everybody should have like a deal calculator. I call it an asset analyzer, where you look into the property and run all the numbers. I've added a cash flow margin. I always had my cash on cash return. I wanted to see this. But I added a cash flow margin and go, hey, if I needed to drop rent 5, 10, 15, 20%, is it still going to cover its own costs? And if you can do that, you're pretty safe. You're not going to lose your asset, and you can feel confident even if the market does shift for a few months or a few years, as long as you have some safety margins there, which is cool.
Totally, yeah.
So what is it? Well, I guess we've been talking about a lot of your successes. You've had success with insurance, redoing roofs and pipes and stuff. That's a win. You've had success in finding good lenders and rolling into bigger, more lucrative, higher cash flow deals. Really, really cool stuff. I always love to ask people about their favorite failure, and I don't really believe in failures, but whatever, that's the word we're going to use. But um, have you had anything that's kind of gone south or burned you, or have you had some failures we can maybe talk about? Because I think that's really what scares people from wanting to jump into real estate is when things go wrong.
So, man, that's so tough because I mean, I'm not gonna say we've lost money on real estate, obviously, because we never have lost money on real estate. One of my favorite quotes is, "It's not about timing the market; it's about your time in the market." So,
Right.
give yourself more time, like things are gonna, straighten out. There's some favorite deals I have. There's some ones. There's nothing I wish I wouldn't have bought, but there's ones that I could have bought at either a better price or because every house is a good deal for the right price. Any
Right.
deal can be a good deal. There's people that have gotten paid to take a house, from people's hands. I've never found something like that, but it just depends on the situation. But there was, there was one instance where kind of it was a scary time. So it's real estate can be scary if you let it be, or if you focus on all the things that can go wrong. You do things, you put things in place to where you're prepared and protected. And so, keeping your active income, having an active income job, take some of that pressure off. I don't think people should just retire and just go right into real estate because that makes it much scarier. But
Yeah.
we moved from our house in Utah. We came here to Kentucky. That was a crazy process, buying this house from Utah and being there. But it's very stressful, very hard time. Not hard time, but I didn't know if I should. I didn't know if it was the right decision. When we bought this house, it was a $600,000 house. We owned what at the time was a $600,000 house in Utah. We thought it was worth what, with the appreciation came end up being way more than that. But we were I was like, I don't want to have these two houses. I was getting ready to fly to Thailand, I think at the time, and I had the closing documents in my possession, and I was supposed to mail them because I was getting ready to fly to Thailand. And I was like, I have to send these today if I'm going to buy this house. Like I was going down to the wire. It was a for sale by owner, so we bought it directly from the owner. It was on Zillow, but it was listed for sale by owner. A lot of realtors won't see those, so make sure you're looking for sale by owner. Make sure you have your search notifications on, because if you're just letting your realtor look, they're not going to see those. So
Right.
we ended up looking at this house a few times, and it was perfect. It was what we needed. But I was like, do we want to live in Utah? Do we want to live in Kentucky? We didn't know. But checked all of our boxes. And so we were flying to Utah, or flying to Thailand. We left, we were in LAX, and I had the documents ready to go, and I was super nervous. I was worried sick. I was like, I don't want to have the pressure of having these two houses. Where am I going to live? I didn't know where I was going to live. So
Yeah.
fast forward, we end up buying it. I actually sent the documents with an Uber driver because you can't ship things from an airport. So I'm walk off on my own. My wife doesn't know what I'm going to do. I walk off on my own, and I'm just thinking. I'm just meditating. I have about a 4-hour layover before this 10-hour flight, and so I book an Uber. Guy pulls up. Luckily, he spoke English. This was a risk, and I opened up the envelope. I said, look, this is just a house I'm buying. There's nothing sketchy in here. Can you take it to FedEx? And he's like, sure. Okay. So I sealed it up, gave it to him. He could have thrown it away. He didn't have to
I
go.
think
Right?
you didn't go with him.
I didn't go with him. No, I didn't have time. So I sent it with him. Has a $100,000 check or something, $120,000 check in it. I said
Oh
like,
my gosh.
and so I'm like freaking out, and he takes it. It ends up costing him double to ship it because the label I had was from Utah. He was from California.
Oh
So
my gosh.
he texted me and said, hey, it costs this much more. Don't worry about it. And I'm like, dude, that's more than you even made on the ride. Like, so I end up
Yeah.
tipping him, a bunch. But I was like, it just worked out, and it didn't have to. It was one of those things that was super stressful. It worked out. Long story short,
That stresses me out just hearing you. Like, here, this is in your hands to some stranger that's not even what they do.
I'm on a flight for 10 hours. I'm in another country. I don't know if they get it. Like, I couldn't even get text messages or whatever. So it was crazy. But anyway, and this is one of those just fun stories I like to tell. It's not like one of those, bad experiences, but it was stressful, right? It was hard, and I felt like I could have been making a wrong decision.
Uh-huh.
Long story short, the property's now, has appreciated, and this property we used to as collateral for this apartment. So had we not purchased this, obviously we would have never looked at the apartment. The Utah house, we moved here to deal with our property here. As soon as we do that, our basement floods in Utah. And it's like,
Of course.
holy cow. Like, we have a basement apartment. We have to move those tenants out. We're living in Kentucky. Now we have to do this big remodel in Utah that we had just done. We had just done like a $15,000 remodel. Wasn't like the nicest of stuff, but it was good. It was a basement apartment, new floor, painted it. We get here, 6 months down the road, it floods. And so we're like, goodness gracious. We have tenants upstairs, tenants on the main floor. Tenants on the main floor were great. Tenants in the basement were upset, obviously, because that was their unit. They moved out, but the insurance, having good insurance goes a long way. So the insurance covered the basement flood. It was a pipe blockage. It was a ball of tinfoil somehow got down the toilet line or something. I don't know how that happened, but it blocked up everything. It flooded sewer water about 4 foot up in my basement. And so we were like, gosh, this is going to cost us thousands. Like, this is, we should have, why did we move here? We're doing this from now Kentucky. This is going to be very hard. Insurance covered the lost rent. Insurance covered most of the remodel, but something that was such a bad experience and could have been a, crushing blow, but we were prepared for it with the insurance and we had reserves had they not covered it, but they did cover it. And then the property was totally redone, right? The basement was fully done, brand new, everything, brand new doors, brand new, it looked like a brand new place. And they had to redo all the landscaping out front as a result of the sewer line that they had to dig up and replace. So all my landscaping was done. And then this property gets listed, this apartment. And I'm like, well, if we're ever going to sell the Utah house, now's the time to do it. The front, it's got great curb appeal. It's got new tenants in the basement. We just raised the rent. Like, it's just a good, and our tenants on the main level was moving out. So it's like kind of the stars aligned, I guess, from something that I was just, it was making me sick, dealing with this remodel. My wife dealt with most of it, but it was just like such a frustrating time. It took like 4 months and ended up timing, this property get listed, this apartment building. So we sold it. We got under, this is crazy, we got under contract with the apartment building before we even had the funds, right? So like we got under contract and now I have to come up with a $450,000 down payment. And I'm like, I don't have $450,000 just laying around. What am I going to do? Am I going to sell some other properties? Am I going to refinance a bunch of stuff? What am I going to do? And so I ended up listing the Utah house, which was hard because we love that home. Listed that. Then the people that bought our house, they had to list their house and close on their house before we could close on our house. And then we had to close on the apartments, and then they were doing a 1031 exchange into another building. So 4 closes had to take place in a week. And so
No.
I'm on the hook for 20 grand in earnest money for this apartment complex. So it's
Like hard earnest money. Like, if you don't buy it, the money's gone.
it's gone. Yeah. So I had 20 grand down and I just kept telling the guy, I'll make it happen. Like, we will close. I've never not closed on a property. We will close on this property. So I listed our house for 1.1 million. And I had, I was hoping the market was crazy. Crickets, right? People looked at it, but no offers. My goodness gracious. So we lowered it. I think we went straight down to 995. We went straight down because I was like, we only got a month. We have 30 days before I'm supposed to close on our apartments. And so we got to drop it. And so we dropped it. Offer came in the day we dropped it. A family that had looked at it, we dropped it. They came back, put an offer. And then they were like, okay, now we got to sell ours. And I'm like, goodness gracious. Like, how is this going to happen? But stars, you could say prayer, you could say universe. It was just like, it worked, right? It worked. And so, I'm hoping in my mind, that the owner would have been cool and extended the closing date for me.
Sure.
But who knows? He might not have. He might have been mad at me. He might have started over with somebody else. He could have thought I was a flake. He didn't know me. He didn't know me if I could actually deliver, but he trusted me. And, I'm not going to say sales are important, but knowing, I think everyone should work a sales job. You and I have worked together in the past, and sales is a very, very pivotal skill, but I knew I could deliver, and it was from experience and, but still things can go wrong, but we were lucky. But that was kind of one of those experiences where it was really bad, could have been a failure, between the remodel in the house from here, just kind of a headache, but it turned into a really cool thing all in less than 7 months. It's like just a
Which
whirlwind.
is, it's just so cool. I mean, that stressed me out just hearing that story for sure. Like, there's like so many pieces, moving pieces, and so many things that can go wrong. And a lot of people, you hear that like, oh, well, I don't want to do real estate because of this or that, or I only want to do this kind of. It's like the cool thing is those moments are heavy, but they're few and far between. You know what I mean? Even as a property manager, it's like the headache is finding the tenant, getting it filled, buying the home, selling the home. But then you're going to have, maybe years of crickets. It's just chill. You know what I mean? It's not that big of a deal. Now that Utah home was sold and you bought this home, it's not like every day or every week it's like that. You know what I mean?
Yeah.
It's like you go through these moments and then it's a lot smoother. And obviously the more projects you're doing, you might have more of those things, but it's cool because it ebbs and flows. It's not always a high stress, high risk, situation. You get through those, and then it's good. I've had properties where I had to deal with a bunch of junk, thing after thing after thing, and then I don't hear anything for the rest of the year, and it's like that's
It's like
nice.
a
But
heartbeat.
guess what? I'm still getting the rest of the year paychecks, right? I'm still getting cash flow. There's still, I'm still making money, even though I put in the work initially, or I will put it in 6 months from now when they turn and that tenant leaves. And again, if you hire a good property manager, you don't even have to do much of it. And you guys have, what made you decide to go all in on property managing? Because that is a lot of work and that is a lot of headache. I mean, I have you doing some of my properties and they've been quite the headache. You've been over personally dealing with, a lot of junk that, and then just to put out the word for, I think the number one thing for out-of-state real estate investing, which a lot of people are interested in, it's something I do quite a bit of, is your property manager on the ground is probably your MVP for out-of-state investing. And anyway, that's a role you've played for me, which I'm super grateful for.
Well, you're lucky I like you because if this was I only do friends and family because for this very reason, like I look at that house and I'm like, I can't let Joe down versus if it's somebody I don't know, it's like, sorry man, your property sucks, but your property is a really
Yeah,
nice one. It just needed more attention than others. And
and you were helping.
most property managers just aren't going to care enough. And so it's very important to vet your property managers just like you would, you know, uh, a job, someone applying for a job for you. Property managers, no one's going to care as much as you on your asset. So
Yep.
you can't just like not check in, and you can't just assume they're going to care like you would. But when I decided to do property management, it was because that first condo or that one unit that we used with someone, we just kept not getting paychecks, and it was like, oh, well, we had to do this $400 repair and this fee and this that, and I'm like, I could have called some. All you did was call somebody. Like all you did,
Yeah.
and so, and I had the time. Working the sales jobs that we worked, I had some off season time. I was like, I'll just do it and I'll see how I like it. And I think everybody should manage a property, which you have done over the years. And so managing those in your backyard it helps you know what you need in a property management company. It helps you know how to keep them accountable. So I think
Yeah.
everyone should manage at least one duplex or basement apartment or something so they can know the process and what makes a good tenant, what makes a good, them be a good tenant. Because you can have a good tenant that becomes a terrible tenant because you're a terrible landlord. And that's what we've learned. Like if we're not a good landlord, they're going to be a bad tenant. If we're a good
Yeah.
landlord, there's a higher likelihood that they're going to be a good tenant. And if we take care of the property and make it nice, they're typically going to take care of it too because they need a place to live. They're not in the business of destroying your place. Too many people think like, oh, they're not going to care about it. They're only not going to care about it if you don't care about it. If you care about it and you care about them, they're going to treat it as such. And I just couldn't find a property manager that had I guess that attitude. And they're very
Yeah.
hard to find. But in bigger markets, like if you're investing in bigger cities, you do have a lot more to choose from. And join these real estate groups in those local markets, and you're gonna be able to ask, hey, who's your top three? Who's your top five property management companies? And just start there, and just go through them. And
I think that's really good advice. And it's like it's such a key thing, like you said, is I found that true. If you treat them with respect and you do your part and you show up and you do the things you're supposed to, they'll take better care of your property. And I've gotten lots of good experience of them, like, hey, you know, giving me good heads up and helping me show the place to the next tenant, just because I was so respectful and good with them that they're respectful and good to you. And it's not always going to be like that, but a key thing I think what got you into property managing, and I think there's a huge principle, especially when you're starting out, is being in control of your own asset. You were like, I'm tired of somebody else deciding if I'm going to cash flow on this. I'm going to take control of my asset, from the management to the purchasing of it to the owning it. Like, I'm going to take control of my investment. And I think that's a key powerful thing, and especially until you have the right players in place to take the roles that you can't. But when you're starting out, everybody should do it for the experience and the principle of being in control of their own thing. And then once they have people they trust and people have proven themselves, they can expand out of that once they know what they're looking for. But I think it's a good place to start.
You never want the passive income to cut into your active income. So like if it becomes a point where your passive income is becoming a job and you're like, hey, I'm not able to focus on this employment, you know, this job that I have that's making me really good money, I'm dealing with these little tedious tasks, then don't, you know, that doesn't make sense. So make sure if you're 5 units or less or 10 units or less and you can handle it where it's not impacting your job, learn it. But there does become a point, if you love what you do or you're making more money doing you're a doctor or you're a salesman of some sort, like focus on that and let someone take the reins. But we enjoy it. I mean, some days we do, but we overall enjoy property management just because my wife and I are both kind of, I'm not gonna say control freaks, but like you said, we like to have control of the asset and we like to know what's going on. And we probably do a lot of stuff wrong, but we have no one else to blame. You know, we can blame ourselves. And so I like having that responsibility on me instead of just being able to point fingers where they're not doing a good job, they're not showing it well and this and that. So, you know, it's kind of, when we decided like this is what we want to do, we then can also now help friends and family, and we try to do a better job for them at not the same price that they're going to pay to like an actual full-on company. So that might be one day, it might be a full-on company. There might be a point where it's like, hey, we don't want to do this anymore. We're going to build a company and just pass it on, but we're going to teach them what we're asking them to do. So
I love it, man. We've already about hit an hour. We could chat about this stuff forever. I love it. I do want to end off on a couple questions of just kind of picking your brain, how you view the world and some things. So I guess we'll just jump right into that just because we're about out of time. First question I like to ask is, what's a bucket list item that you're excited to check off next? Nothing to do with real estate, just the life of the Caseys.
Man, so a lot of what we do is either travel or real estate, and it's, my wife and I took a trip, and you and I have gone on, talked about this. We took a trip around the world. It was the coolest thing we've ever done. Wasn't the best investment, but it was something. I could say it was a good investment, right? It was a very good spend because it helped me think bigger. I guess you'd say, you know, this was early on. We didn't have kids yet. So if I was to do it all, you know, I would have to change some things on how we do property management, but I would probably like to do that again with my kids one day. Go around the world, and you know, we took 30 days and went all the way around the world and made about 8 or 9 different stops, and it was super cool experience, and I'd like to do it again, but not right now, you know.
How old do you think you want your kids to be? Because I always still wonder, like, at what age is it worth that investment? Because you're not going to do that every day, you know?
Yeah, exactly. You know, we have a 5-year-old and a 2-year-old right now, and I don't think they would get much out of it. And the 5-year-old might. He's a pretty good traveler, but I mean, maybe all teenagers, you know. Yeah. Then they might not want to go, and they might hate me. So it's like, you know, they might like not. Oh, we got stuck with dad for 30 days, you know, heck no. So
we want to hang out with our friends.
Maybe like 5 to 12, you know, 5 being the youngest, 12 being the oldest. I think that would be fun because they don't, you know, the 12-year-old doesn't hate you yet, and the 5-year-old's fun. So if I could have all of our kids in that window, that'd probably be fun. So.
Okay, well, you got another 5 years to plan your trip around the world.
Yeah.
I like it. Next question is, what is your definition of freedom? How would you define freedom, Kevin?
my definition of freedom. So there was a quote that our my wife's volleyball team used, and it's like, what is it? We do what we want. We do what we have to, so we can do what we want. Freedom for me is doing the things I have to, so that I can do the things that I want to. It's not just doing what I want only. So freedom for me is doing having the ability to do what I have to, so that I can do what I want, and not having someone else, just having that ability to. Like if I was, handicapped or in a wheelchair, like I wouldn't have the freedom to do what I have to do what I want to. So if I can always be able to do what I have to do what I want to, that's the goal, right? Like that's freedom to me. Like, not saying you can't do everything you want to, being paralyzed or having a handicap, but if I can do everything that I have to in the day, so that I can then do what I want to the rest of the time, that's freedom. Just having the ability to do that, if that makes any sense.
No, I really like that. And it focuses on the other side. A lot of people are like, "Oh, freedom is doing whatever I want." You know what I mean? And I like how you pinpointed, like, no, the freedom is being able and capable to do all the things that need to be done, because that's what allows the rest.
There's a lot of
That's
stuff
really
I do in a day that I don't want to do, but I have to do, so that I can do the things that I want to. And if there's ever a time that I'm unable to do the things I have to do, then I'm not free anymore, right? I either have to hire someone to do the things that I can't do, or think of a different system. But if I have the systems in place, or the ability to do the things I have to be done every day, and I can do what I want to, that's freedom to me.
I love it. All right, last question before we let you go. If you could send out a text message to the whole world, and everybody's phones go off, they get a message from you, what would that text message say?
So, there's probably a lot of things you could say.
Sure.
But the thing that I would want to say is, it's never as good or as bad as it seems. And I think that's especially important for right now, with all the people talking about how terrible the world is, or how things are crashing, and markets are going crazy. And this, we're doing this in June, and there's a lot of people freaking out. And this is the time to invest, because when everyone's talking good and everything's great, like that's when everybody wants to do things. But even then, it's not as good as it seems. A year ago, when everyone was talking about how great everything was and everything was at all-time highs, or 2 years ago, it was all a facade, right? It was not. So nothing's ever as good or as bad as it seems. And having that mentality where it's like, if you can just have your deal calculator that you're talking about, if you can have, whether it's real estate or whether it's your family life or whatever, like if you can just have your set foundation and your set parameters for how you approach the day, and your deals or your investments, and if everything meets if you remove the emotions, you're able to make much better decisions. So don't just base it off of how terrible things are, how good things are, because it's never as good or as bad as it seems.
I like that. I like that a lot. We'll end off on that, but before we go, what's the best way for people to keep in touch with you and follow you, if you want them to keep in touch and follow you?
You and I talk real estate all the time, and I love just having conversations. This is not anything, when I do this stuff, it's not it's not a flex or show off. I wish these are questions that I wish I had been answered, and maybe just somebody that I could have reached out to. So I love to talk real estate. So it's fun for me. You and I have had some really good conversations where I've learned a lot from you, and I've been able to hopefully contribute some as well.
You helped a ton when I decided to do this full time as my full focus investing. You really spearheaded a lot of it for me, and I appreciate that.
So you can always Cashflow KC's. We don't use it a whole lot. We haven't posted on there in a while because we're not really like Instagram influencers or anything. We just more like to document the things we've done, and I haven't really done much. But my regular Instagram is KC Massie, just KC Massie, and so you can reach out to me there. I'm sure you can get my phone number. It's 859-475-3330. But I love to just talk and maybe help people walk through a deal, or just understand that there's a lot that can come from real estate. Not everything's perfect, but it is. I wish I didn't have any guidance, I guess you'd say. Podcasts weren't real big. Smartphones weren't even real big when I started. So It was more of like
Yeah.
just reading books and just hoping I was doing what was right. So you can buy bad deals, you can buy good deals, but usually it's just taking the time to learn from as many people as you can. So podcasts like this, audiobooks, all those things. But I'd love to answer any questions if I can help in any way. So
Awesome. Well, that's super generous of you, and it was a treat having you on. It was fun for me personally to catch up and hear more details of the stories. But for now, this is Joe Jensen signing off for the Real Estate Investing School podcast, reminding you to do what you have to do so you can do what you want to do.